Good evening, folks. Welcome to TopGunsStockTrading.com. This video is for Monday, 27 January 2014. All right, folks, let's get right into the action. Looking at the spider chart, the S&P, the ETF tracking the S&P. We had a not a huge sell-off like we did the last couple of days, Thursday and Friday, but today we did see some sell-side pressure, and we were looking for a bounce at the 177.50 level. Actually, is a little bit lower. It was the 177.32 level, and the spiders got down to 177.12 before they bounced. So 20 cents lower when they got the bounce, not bad. I did get in the SSO today at 94. 34. We'll pull up that real quick. That's 2 times ETF long for the spiders. It closed today at 95.01. It was up to all the way up to 96 and change there. So we're up to over 2% on that at one point in the day, but it came back in towards the end of the day. So no big deal there. We'll looking for a further bounce in this market, like we talked about yesterday. This market is in the oversold condition, and we are, like we talked about, going to see some buy the dip mentality and some support coming in with the Fed supporting this, as well as the president, no doubt, tomorrow night in his State of the Union will offer support to this market. So I don't think it's going to get too out of hand before the invisible hands that be will come in and support this market. But it was a nice trade. It's still a nice trade. It bounced just like we talked about the 177.32. Now that 177.50 or 1775 on the spiders, or the the S&P is nothing cosmic. Everybody and their brother has been touting that support line, which honestly makes me a little bit weary of it. And honestly, with a couple other factors that are pointing to it, I think it's that dam will also break in due time. However, I do think we're going to get a bounce beforehand before we go a little bit lower, and I'll go over a couple of things why I think it's going to. Reasons why I think it's going to go lower, but everybody talking about it. Usually it doesn't come to fruition. That's one of the things you'll come to see as you'll look at the media and the CNBC and the financial news as kind of with a critical eye, because they do have a modus operandi. They do have an agenda to push, and it's not exactly an agenda that fits your bank account or your investing account. So be very wary of what you hear on the TV. They do have an agenda, and no beans about it. They're out. The institutions are out to make money, and that means that it'll be at the hands of the little guy, or at the expense of the little guy, and that's us, the average investor. So. Another reason why I think this bounce will not last very long is that the Russell 2000 is leading this decline. Today it went down. The Russell was down 1.46%. We're looking at the IWM, or the ETF that tracks the Russell 2000. So it went down 1.46%. You see some lines I have drawn in here for support lines. Again, these are temporary, or not temporary, but minor support. I don't think we'll see any type of bounce. We will get a minor bounce here, like I said, but the real support comes in at between the 106 and 105 level, in my opinion, and that 200 moving average will move up to support that. So 105, 106 is where we get a bounce out of the Russell, in my opinion. And that's the IWM that tracks the Russell 2000. So when the Russell leads, as well as the NASDAQ, and again these are the Qs that track the NASDAQ, down 1% today. When these two indices lead the market down, that means small business in America, these small businesses, when those guys fail or fall, they are a leading indicator of how the economy is doing overall. Likewise, when the Qs fall or the NASDAQ fall, that's a risk-off trade, tech off trade, if you will, and investors are taking their money off out of the riskier trades and put them in safer assets. All right, so that's a good indication of a strength on the sell side pressure. Again, the spiders or the S&P was only down 0.5%. The Nasdaq was off 1%, and I believe the Russell was down 1.5%. So that's why I think this will be a short-lived bounce, 2 to 3 days, maybe the end of the week. This is a big week too. We got, like I said, the president's talking the State of the Union address tomorrow night, and then we got the Federal Reserve Bank Bernanke's last meeting coming out Wednesday at 2 p.m. Eastern time. So those two big events, invisible hand is going to keep this market up. Now, what's the Federal Reserve going to say? I think the market's pricing in that they're going to reduce their bond purchases by another $10 billion a month. So it leaves the door open for them not to do anything, and that would send this market up again. So this is going to be a very volatile week. You have to just keep your emotion out of it, position yourself. Your position should be such that you can mitigate your emotion, so you don't want to put too much money in one trade, having this market whip you out of your positions, because that's how the average guy, the little guy, maneuvers, and he gets emotionally whipped out of this market, stopped out of this market for losses, or who knows, he sees the news going one way and they preaching the market. Preaching the market one way, and the institutions just rip it the other. So you got to stick to the charts. The charts are chart of the emotion of the trader, and that's where the real money is. That's where the truth lies. The truth is in the charts and not in the media. All right, let's move on. Lots of stocks. Another reason why I think this market's going to bounce is there's a lot of stocks coming into support. With that being said, I covered another short today, the IBB. I put this on the Fox 3 alerts. I think I haven't updated it yet. I did put it out on the Traders Forum that I was covering at 238 and change, and it got as low as 234 today. So some opportunity cost there I missed out on, but hey, I took a profit where I had it, and it was a pretty good profit, over 4% in the equity. I traded the option on this, the 250 option, so I made over 100% on that. So I had shorted at 248, back up here on the 17th of January. I put that on the Fox 3 alerts, and I just covered that today. So could I have made more money? Sure. But I can't be too greedy in this business. And like I said before, we're shooting for singles and doubles, not home runs. And that's how you build real wealth. You build your real account up, hitting singles and doubles, taking small losses if you have to. But the point of the matter is you make 8 out of 10 profitable trades, and the 2 out of 10 that aren't profitable, you limit your losses there. I believe I said this probably in a couple of videos that you can bat 800 in this business and still lose money if those 2 losses are pretty substantial losses or add up to more than your 8 profits. So you can still lose money batting 800, which is kind of weird to think about. So you have to limit your losses, set your stops, and get out. Make it black and white, and get out, keeping the motion out of your trade. All right. Speaking of stopping out, DXM today, I told you I didn't like the fact that on Friday it popped and got pushed back down. That's usually a bullish sign when you see an equity jump up like that and the traders just sell it. So there's a lot more selling right into that pop. That tells me that stock's going lower. So I set a break-even stop on Friday afternoon, and today we got triggered at 598. So I'm out flat on DXM. No harm, no foul. As you can see today, it got as low as 566. It closed about 596. So it is what it is. I stuck with my stop, and that was going to be a break-even. So we'll see how that ends up. ARIA, what a mover this thing is. I'm out of this at 820 and change like we talked about. This thing gapped up higher, went as high as 974, closed it at 791. So if you were a more aggressive trader and stayed in this a little longer than me, you could have made some mad cash on that one. Me, I'm a more conservative trader. Again, a singles and doubles type of guy. So I took profits and ran. This right here, if you haven't taken profits yet, you might think about it. because this big reversal candle today tells me this stock is going lower. So if I were still in this stock and I missed the two pops, shame on you. But be very careful because this is a reversal bar on high volume. That tells me there were people out there taking profits and they were selling. Lots of selling going on. So over to you on how you want to manage it if you're in it there. But mad cash if you stayed in there till over the $9 range. Wow. 680 to 980, a $3 move off of a 680 entry. I don't even want to do the math. That's 42% gain if you bought in with me and stayed until the high. But there it is. It is what it is. Okay, we talked about the IBB. Hey, we talked about transitioning. If you notice, I have basically transitioned. I don't have any more shorts out on the table. Oh, actually, I do. I got the Boeing one still out there, and this is a bear call spread that expires in February. So this is my only short out there right now. Oh, with the exception, sorry, got Boeing and Bank of America. Again, bear call spreads that expire in a couple weeks, February 21st. So I'm gonna stay in this. Bank of America got a doji there. Again, at the wrong place of the chart. I think this kind of muddles around here. If not, goes lower. I think I'm pretty safe with that. As well as I think Boeing actually goes a little lower. So I'm going to stay in these trades just because they're spreads, and I'm basically you're selling time with spreads. You're not necessarily, I mean, you are betting that the stock price is going to be below a certain price, but we've already got our move there, and I think I'm just selling. I know I'm just selling time on that, so we'll stay in those two short trades. There's only shorts I have. Like I said, we got an SOSO today. As well at our level there at 94.34. It got as low as 94.12, so 22 cents off. Not bad. We'll see where it goes tomorrow. It's looking right now. The futures are up. E-mini futures are up 5 points, so that's right around the anything below 5 points. It's like who cares? They could go either way. Anything above 5 points, start taking notice of it. Probably the opening is going to be higher there. So they're up. They're right on that threshold of 5 points. So we'll see where it opens tomorrow. Anything can happen, especially when Europe opens. I believe at 2 a.m. Eastern time is when the European markets open. So Asian markets are swinging between gains and losses. So they're about on a flat line today, trending towards positive. So we'll see how they affect the U.S. Open there. Couple stocks we are in Target. So the market is down. S&P's down 0.5%, and Target's down a penny. So it's basically, relatively speaking, showing relative strength. Again, we're in this at 58.26 from I believe it was 2 days ago. Yeah, on the 23rd is when we got in this. We nailed the low of the day there. But the next day on the big sell-off on Friday, it moved lower. Today it was down low, a lot lower there, and it came back. So it's showing relative strength to the market, even to the S&P, which was the best performer of the day. It's only down a penny here against the S&P, down 0.5%. So I like Target as a relative strength. I'm looking for a bounce in the Target for there. Other stocks I'm looking at, J.P. Morgan. I'm liking this one. This got in the end of the low of 54.71 today, I believe. Yeah, 54.69. So my level on that almost nailed that by 2 cents. I didn't get in this today. I just have these support lines drawn in. To be honest with you, didn't necessarily where I'm going to buy it. That was a nice level today. Maybe this thing goes lower. There's a lot of stocks coming into the 200-day moving average. This is a 53.78 there. Great price to buy, 53.72. Sorry, great price to buy J.P. Morgan if we can get down there again. That's another $1.25 away. So significantly lower percentage-wise, but they still can get down there if we have one more flush tomorrow in the markets. We'll see. But if it gets down there, it's a pretty good price. I'm going to hold off until 52.85. Well, is it going to get there? I don't know, but that's going to be my price at 52.85. Goldman Sachs is another one coming into. I don't have any support lines drawn up here, but anytime you have a stock price coming from a high pivot into the 200 moving average, you're going to get a pretty good bounce. Okay, so that 200's at 161.44. That's only $3 away. It's less than 2%. 2% away from that, so that's not a big move there. 161.44, a great buy on the Goldman Sachs there. I even have a time factor in here as well, so if that gets into there, I may pick that up tomorrow. We'll see if we get one flush tomorrow, but as it looks right now, at least tonight, the futures are up. All right. Let's take a look at USO just to keep it simple. Looks like, as you can see, the big move up, and you got sideways consolidation. So this $35 level is no longer it'll be very minor resistance, maybe a 1 day if that. But I got to look higher for resistance on this USO. So down 35 cents today, or 1%. This is a bullish consolidation. Going to go higher off of that, so we'll look a little higher for our short on that. More to come on USO or oil. Gold pulled back today, 1% back. Again, I'm still looking for an entry price on this. Forgive my. I'll just take them out of there right now because they are a little bit distracting. That's my W pattern that I drew in the other day. So if you look at gold here. We got the move up, and now you got the consolidation phase going on. So that's what I'm looking at. I'm looking at this gap fill right here at 119.65. We got the two moving averages coming in as well as for a necktie there. So a pierce of $120, not far off, but we also need the pattern as well. So we need a three-dimensional trade. We got our price. We need a pattern, as well as could be some kind of another factor that we have to find. So we have to let this thing play out. We don't want this thing to come straight into this level tomorrow because that's too steep of a sell side action, and that momentum will carry it through that level if it comes into there on only a 1 day. So we need to get a time factor as well as it kind of floats down into that level, maybe, and then we can get a pop out of that to go higher. So right now 120, Pierce of 120 is my level, but that's caveated with it's got to come in with the right pattern. You can't come into that tomorrow. It won't be a good trade for tomorrow. It's got to probably next week is when I'm thinking gold would be a good buy on maybe Monday if it kind of floats down into that level. All right. So that's what I'm looking at. Hey, let's you can see we're kind of easing out of the micro caps. The DXMs, the ARIAs, the I don't know if you're around with the ASTM. This was one of my when I first started doing videos on this. This is one of the ones I bought and then sold, basically with the four right here at this top here. We almost nailed the top here. 432 is, I believe, what I sold it at, and I think it was on the forum. 432. As you can see, it come up there and just kind of lost steam there and kind of fizzled out. Some other dry ships is kind of lost its luster. So you can see, whoops, that's not dry ships. These small caps, there's a time and place for everything, and there's a time and place for small caps. And when these small caps start to go, you know the end of the bull run is near, because traders and institutions are looking for some type of some growth, and all the other big name stocks have increased their stock price, and now they're looking for the little guys, the diamonds in the rough, if you will, that haven't run yet, and that's when the small caps start to run. is when all these institutions and traders start looking in the weeds for the small boys. And then when those guys run, you know that the time is near, time is right for this market to pull back because the traders and institutions are just hunting for anything. They can't find anything. Heck, they're selling, and obviously the distribution days we've been talking about since last week. I even showed it to you what it looks like on the days real quick. We've looked at the 10-minute charts a couple times. I won't go through that again, but you can see these big red down candles with volume. Those are all distribution days that the institutions have sold into the little guy. Back on the 13th was one. This was one. The last couple of days, actually, 23rd, 24th, and even today on the 27th, all institutional selling. But we're looking for a bounce. If we what's going to change my view? Right now, I'm short-term positive on this market. What would change that view is if we stop, if we confirm below this 177.32 level. Now, if you don't know what confirmation is, you have to come over to TopGunStockTrading.com and join up, sign up for the membership there. It's free. Sign up for the membership, and I will get together my webinar, and we will get that running, and you'll know what confirmation is. But until then, you'll have to take my word for it. If it confirms below the 177.32 level, that's when I'm going to change my view to short-term negative. But until then, I'm looking for a bounce on this market as long as it stays above the 177.32 level. So that's my stance. This week we're looking for a bounce, looking to get some long positions going to make a market, to make get on the right side of this trade and make money on the upside. And then after this week, most likely we'll be looking to sell short or start selling our long positions and easing into some short positions for the next downdraft that will be coming in to this market. All right, folks, I've talked long enough. Again, come on over to TopGunStockTrading.com and sign up to become a member. All right, folks, we'll see you in the charts. Have a good night.